Hello, everybody. My name's Max. Welcome to the afternoon end of day high yield report or high yield rundown. I can't never decide what to call it. Okay. All right. Over here in the left-hand column, we had 5 out of 6 funds outperform the benchmark. That's really good. Look at triple QI outperforming. JEPY outperforming, although barely, 19 bips compared to 20. IWMY outperforming. USOY is the only one underperforming. And now let's just look at the charts. Let's just look at the old-fashioned way since the technology is failing me. There's a NASDAQ cash chart. It finished with about a half a profit. You can deal with that. SPX, of course, they're aiming to finish inside of that box I draw. That's a profit box, which represents the strike price and the premium received of the option trade they placed. Finishing inside, it's the goal. Finishing at the top of its max profit, bottom of its minimum profit. They're middle of it, they're halfway profit. So that's good with them. That bodes well for JEPY. Now we'll look at IWMY, Trades Russell options. Okay, that's a full loss. All right, so we have 2 other underlines in the Defiance world, and I forget to look at them sometimes. Let's go to USO. This is how this all started off. USOY is a high yield fund that trades sells puts on USO, which is an index comprised of oil companies, United States oil companies. And USO stands for United States Oil Fund. Anyway, these guys were a full profit today. Now, this option doesn't expire till tomorrow, but if they stay where they are or just stay above 72, they're going to be at a full profit. So nice job, guys. All right, then we also have an underline for TLT. We have TRES, or Defiance has, not we. I don't have any of it. TRES is it's a Treasury alternative yield fund. Last time I checked, it was up today. The play with this fund is it wants prices at extremes. So it wants the price of TLT to be either way above the red box or way below it. Anyway, the bonds have ticked up lately. TLT is a bond fund, a bond ETF. They've ticked up and started paying off. So these guys have a 4-legged position on it. See this option right there that says $2.43. They own 500 of these. They bought them for around $1. Okay. Now the bad news is they also own 250 puts that they bought for around $1 that are worthless, a little bit less than $1. But they have 500 calls. So their bet's paid off. They're going to cash this in to be a winning bet. And these options expire tomorrow. So I'm sure they'll put on a position for a couple of weeks from now. It'll be interesting to see what they do, but they did a nice job on this one. Wasn't really anything they did. They do the same thing every time, pretty much. But they did catch some nice. They monetized some nice volatility here from bonds rallying here the past week. And to be fair, they did do something. They used to have 500 calls and 500 puts. They dumped 250 of the puts somewhere along the line. And that was the right move because those puts were at a full loss. I didn't see what day they dumped them on, but at one point they had an even number of calls on both sides. All right, nice job, TRES. Very good. Okay, on to some yield max stuff. Yeah, Tesla up 1.68% today. Look at old Tesla down. Of course, they are ex-dividend, so that is wrong. So This charting package does not figure it out. It shows the change as negative because it doesn't factor in that the dividend got paid. Most of the other charting packages will show the change as if the dividend hadn't happened. Let me check something here. Adjust data for dividends. Let's see. I was making sure this one was on adjust data for. All right. Tesla option, yield max, Tesla option. Okay, well, that's Tesla. Okay. So if you look at okay, yeah. So yeah, the Tesla, the only difference for the only reason for the difference was because of the dividend that came out. I believe they paid 64 cents. So Tesla did on a $14 stock. What is that? Anyway, that's the reason for the discrepancy there. However, the good thing is Tesla has one more day to go on these covered call positions, and neither of them are capped out. They still have a little bit more room on the upside. They could catch a little bit more appreciation on the upside should the market turn down. If you are a Tesla bear and you think Tesla's going to go down, the inverse Tesla fund, which is called Crash, has plenty of room to appreciate. They aren't capped out until they get down in the low 170s. Of course, a big rally today for Coinbase. Both of their calls are capped out. We'll see what happens. We'll see if they roll these out. I'll look at the website tonight and I'll update you when we have the nightly report or the morning report. But that one, Coney, is definitely capped out and has been for a while, has been all week. All right, Misty, look at that gigantic dividend that came out of there. Wow. It looks even worse if you don't turn on the adjust data for dividends. But even with the adjust data for dividends on, it's been a rough day. Yeah. All right. Well, yeah, it's not a great day in the Misty world. And of course, that makes sense because Mr., the parent fund, pulled back 2.25% today. So that makes sense. These guys are right in the middle of all their strikes. They have, I believe, 6 strikes. Some of them are real close together. But they still have a little bit of room for the upside. Misty still has a little room for the upside. The covered call strategy. We'll see. These guys will probably roll tonight, or if not tonight, for sure by tomorrow. I'm looking forward to checking the website out tonight. There should be hopefully some interesting changes. Okay, let's look at, what else do we have to look at? Let's check Amazon. Haven't you? Look at that. Nice job, Amazon. Wow. Beautiful. Finally, this one time it was a fake out. I didn't even see this happen. They got above, and I mean, they peaked above, then came back low, peaked above, back tested. Anyway, it gave a person, there was ample chances to get in on the long side or the short side if a person wanted to. But man, that was that's a good looking bull wedge there. You could see what happened back here. Similar thing. We had one fake, you know, and then it went even lower, just like it did here. But anyway, then when it finally did break, you know, we mounted a rally from 170 to 190. Now this one broke more around 180. So we go 180 to 200. We'll see. That's the kind of technical analysis I like, just real basic trend lines and keep it simple, super simple. All right, I think we've looked at all those. Let's look down here at the buffer report. Okay. Right here's the daily error. The high yield funds in blue, just to remind you, the benchmark's in red. A lot of sideways action is what I'm kind of seeing here outside of USOI and USOY. Not a great day in the IWMY world or the ULTY world. Okay, so here is the daily single names. Now, these look a little better, especially if your name's Tesla. TSLP did very well. Nice job, TSLP. I mean, boy, people that own AMZP did a lot better than people that own AMZY today, assuming that the computer and the people that supply the market quotes made the calculations right. Like I was showing you, some data vendors forget to add the dividend back in there when they show the change, and they show a change that's not a real change. And I wonder if that maybe happened here. Well, I hope it did for the sake of people that own it. Because AMZP, the curve fund, was up 1.13%. You know, it's just one day, like I always say. Good day, PayPay, PP. Call it PP. If you can't beat them, join them. Good day, PP. Sky or Square, Block, whatever you want to call it. Great day there, up 1%. Jomo outperformed. I'm going to say fund of the day is Tesla. Okay, now let's look and see what fund of the month is. This is last deck day to this afternoon. Once again, I think they did the calculations right with regards to the ex-dividends, but if you see something on here that looks wrong, let me know. I mean, Triple QY had a heck of a month, right? TUGN had a heck of a month. Really none on the bad side other than TRES, all TRES and USOI. USOY was too young to have a 30-day history. Now we'll look at the single names 30-day history. And the story is NVIDIA and Misty. As we know, we've been watching these every day. We have a lot of positive performance, though. Some outperformance by Maxi. Some good performance by Coney, Misty, NVIDIA. Almost outperformance by Aptly. Outperformance by AMD. Outperformance by MSFO. Underperformance by OARC. Inline for Fibby. Not great performance for Dizzo, but it did show some buffer. Infly looked all right. A lot of these looked all right. Goop kind of stands out. Goop almost beat the underline, and MSFY did beat the underline. All right. Well, great job, guys. Let's see what's going on in after hours trading. I wonder if anything's moving. Let's just see what's going on. VVIX, that's not really. I don't really see anything going too crazy other than this. Okay, let's talk about this one. All right, I know I'm not trying to give picks, but I made a video and gave a sweet pick on this one the other day. And let's look at option strat real fast. The update's over. If you aren't interested in options, you are excused, and I will talk to you tomorrow. I just want to talk about this option trade really fast. It's actually two option trades right here. So this is the one that I did the video and put on 2 days ago. The market for GameStop was at 28. Just to recap for somebody that didn't see it. Yeah, when I did the trade, it was at 28. The volatility is at 500 right now. When I put the trade on, the volatility was high. It was obscenely high, like something like that. So, and when right here at 29, I had like the price, if it goes nowhere, of like $270. You could see it. Okay, yeah. I'm trying to zoom in a little better. I had a go nowhere price of, a couple $100. And then I had a buffer of about 20%. So it's hard to tell because I'm kind of backwards looking and adjusting volatility. Anyway, so this trade, and I showed everyone this at the time, it makes money if the stock goes up. Of course, we want the price to go up, no doubt. But at the same time, it also makes money if volatility goes up. It kind of serves a dual mandate. It's a four-legged spread. It's 2 calendar spreads. It's a double calendar spread. You can put it on all as one trade, and that's in fact the best way to do it. Put it on as a limit order, all as one trade. These are extremely liquid options. In any event, this worked out nice for me because both things happened to me. I got the tick up in volatility, and volatility went from low 400s to, I think it's at 492 today or whatever. All right. So volatility ticked up, but you can see a volatility, like you can see volatility going up. It makes the trade. I'm exaggerating. I'm going further, but I'm exaggerating a little bit. Volatility, if it goes from here to here, you can see it makes your buffer bigger. Volatility can keep going up so much that it can make you almost don't have a loss, depending on how you put these together. Don't have a possibility for a loss. In any event, this was a double winner. Not only that, the thing you're aiming for when you're doing a four-legged spread, just forget about the four legs. Look at this call right here that you're selling. You sell a call and a put that expire tomorrow, and then you buy a call and a put that expire the following week. And those are just to hedge these. Those are just so you don't have naked option margin on this one. So in any event, you're just trying to sell this thing. It was $2.79 2 days ago. And that was an obscene amount of money, right? All right. You're trying to sell it. But if something like this happens where you got your strike blowing through basically, because it is the 45 strike. So it actually means, but actually remember, what do we know from the Defiance funds? When you sell a put, when you sell a call, anytime you sell an option, max profit's always at the sold strike or the highest sold strike. Let's say in the case of this one, our highest sold strike is 45. So that's right where the market went today. So we're right about a max profit. So in the morning, I'll probably take this off, and I have this on in real life too. But in the morning, I'll probably take this off. This shows you how much profit the trade has now. The trade right now is up about $675. As the night goes on, and then as the morning happens, that's the middle of the night. Here's in the morning. In the morning, depending on what the market does, if the market's down 25%, this thing would be worth 700. If the market's down 50%, it'll be worthless, or it'll be break even. But then on the other hand, when the market's up 50%, still worth $588. So in the morning, probably take it off no matter what, but this couldn't have worked out better. You're kind of aiming for the sold strike. And you really, when you do this strategy, and I'm doing more videos on it. If you're interested in it, look for those videos. But when you do the strategy, you're aiming for this strike, and you're daring the market to go there, and you're moving it out as far as possible. I almost sold the 50, and now I wish I would have. The further out you go, the less downside buffer your trade has. This trade right here, just think of this as a poor man's covered call. We'll call it a poor max's covered call, because watch this. If you've already seen this demonstration, I apologize. All right, here's what a covered call looks like. And we'll do the same date. We'll do that option. Wait. We'll do the same date and the same strike price. That is what a covered call profit and loss graph looks like. So this is kind of a synthetic, especially because I don't usually hold it till expiration. If you take it off a little before expiration, it usually looks kind of, the profit and loss graph looks covered call-ish, except there's no unlimited loss on the downside. I hate that unlimited loss on the downside. So I think this right here is a better plan than this right here. There's advantages and disadvantages to each, though. There are definite advantages to doing a covered call as well. But that's outside of the scope of this video. I just wanted to show you guys how that trade's working out. And like I say, if you're interested in those kind of trades, I talk about them once or twice a week. I'll make a video on them, and I'll give some trade ideas. And I'll tell you what, you guys have an assignment. Give me a new meme stock. But we need to do this on a stock for next week that's maybe going to be a short squeeze candidate. Usually when one of these things goes in play, we'll have other ones that'll go up in sympathy. So where's another place I could deploy money in this manner? Now, I also had a video today, and I put another one of these same trades on for next week. And this just happened like 1 o'clock this afternoon. This trade, according to Option Strat, and I did not put this one on in real life yet. This trade, according to Option Strat's up $133. And Option Strat's pretty darn, and that's in 2 hours. And Option Strat's pretty darn accurate. On this one, I just sold the 40 call, not for Friday, but for the Friday after next. I sold it for $4.27 2 hours ago. And I thought that was an obscene amount of premium. And it was 2 hours ago, but then to hedge it, this is a counter spread or diagonal spread. Anyway, then I'm long the 34, not for Friday, not for a week from Friday, but for 2 weeks from Friday. So for the 21st, I'm long. I paid $7 for that one. Okay. Well, that one's worth $17 now. So that's a $10 winner. This one is a loser. Anyway, but as the thing is, we're waiting for the time to come out as the rest of the time premium comes out of this option. Watch this line move up, the profit line move. Even if the market doesn't move, this will go from a $130 theoretical profit to, it'll go to a $600 profit. So the tent, what I call the tent, which is the short strike, or where you're really aiming for on this one's $40. So really, for the sake of this spread, which is for not tomorrow, but it doesn't expire till the next week, this would actually be a little better if the market kind of chilled out by about 14%. This one would actually do better if GameStop came down 14%. But basically, it just needs time to pass. So we get into like, here's Tuesday. So by the time Tuesday comes, it's worth $340 if we're in the same spot. GameStop would have to drop more than 43% by Tuesday for this trade that I put on 2 hours ago to become a loser. These trades just have such a huge advantage is what I'm trying to illustrate. When you can sell options for just crazy amounts of money, you can put on trades where you can just make such a really wide range of positive outcomes for you. And that's what I'm trying to illustrate here. All right, guys. Well, I sure hope you enjoyed this. I will be back. I'll be back probably tomorrow. But I appreciate you guys. You guys have a good day. And like I say, leave me comments. Tell me your favorite way to play earnings trades. That thing I just showed you is also a good way to play earnings trades. Or it's a way that you can play earnings trades. It's a good way to play any type of stock that you're expecting volatility in, and maybe even volatility to keep going higher. It's a volatility play. All right, guys. Have a good one. See ya.